The broadcast is now starting. All attendees are in listen-only mode.
Welcome to today's webinar. I'm Andrew Sake and head up content for Minds and Money. Before we start, a couple of housekeeping comments. The webinar is scheduled to run for 45 minutes. All registrants will receive a copy of the recording of this webinar via email, and you can ask questions at any time by using the questions tab in the GoToWebinar panel on your screen. If you experience any trouble with sound, we recommend you exit the webinar and then log back in again. I'd now just like to introduce today's webinar panelists and the topic, which is on the future of Australian exploration. Although majors have underinvested in exploration for years, there are signs that this is changing. This means good news for juniors. At the recent Minds and Money London show, Rick Rule, CEO of Sprott US Holdings, pointed out that many majors had recognized that they need to change and now have a renewed focus on exploration. So what opportunities does this create for exploration in the Australian junior mining industry? To debate some of the issues, we are joined by Richard Holmes, Head of Exploration and Growth at Oz Minerals. As Oz Minerals Head of Exploration and Growth, Richard is responsible for the exploration, acquisition and development of additional mineral opportunities for the company's current portfolio to underpin its growth strategy. Richard has over 20 years experience in mining exploration and business development in the resources industry. Before joining Oz Minerals, Richard was managing director of an ASX-listed junior exploration company where he was responsible for securing a North American VMS project and its subsequent exploration success. Dr. Mark Bennett is CEO of S2 Resources. Mark was the managing director of CO Cirrus from its inception to its merger with Independence Group, and was non-executive director of Independence Group following the merger until May 2016. He is a geologist with 26 years experience in gold, nickel and base metal exploration and mining. He's worked in Australia, West Africa, Canada and Europe, predominantly for iron ore mining and WMC Resources Limited. Mark is also a 2-time winner of the Association of Mining and Exploration Companies Prospector Awards for his discoveries, which include the Thunderbox Gold Mine, the Waterloo Nickel Mine, and most recently the world-class Nova Bollinger Nickel Copper Mine. And our third panelist is John Forward, Director from Lowell Resources Funds Management. John has more than 25 years experience in the Australian international resources industry. John has worked as an exploration geologist in Australia, Tanzania and Indonesia, including the drill out of the 3.8 million ounce North Mara gold deposit. John spent 17 years with Rand's Merchants Bank's Resource Finance Division, arranging providing debt and equity finance for junior mining companies globally. So I think without sort of like further ado, and sort of a warm welcome to our webinar panelists and also all those dialing in, I'd like to sort of dive in with the first question. In Australia, exploration budgets have increased by nearly $200 million in 2019. Explorers allocated just over 1.5 million to Australia in 2019, a 7-year high. These increases were driven by higher allocations for copper and gold by producers. With gold recently reaching a 7-year high, we can expect gold exploration investment to increase in 2020. So, Richard, the statistics I've just outlined on paper seem good. Is the outlook bright for Australian exploration?
Thanks, Andrew, and that's a great question to kick off. Is the future bright for Australian exploration? I think in the short term, I think yes. I think the buoyant gold prices has really re-engaged the sector, and there seems to be plenty of money flowing in. But I think if you look long term, that we've had significantly decreasing discovery rates over the past 10-15 years. I think we all still suffer from the skill shortage. It's really difficult to get young people into the industry and out in the field. So I think the combination of those two, I think the industry is going to be facing some challenges beyond the short term. And yeah, I think the longer term we're going to see more and more challenges with the depletion of the resources and the resources not being replaced. I think one of the other things we also see is the I suppose the risk capital. So I think if you look at where the money's being spent at the moment and going forward, there's less dollars being put into very early stage exploration, and maybe we tend to revert to the safer side of brownfields drilling and increasing known resources. So those sort of out of the box discoveries which really drive and invigorate the industry are becoming less and less apparent over the years. So yeah, I mean that's my sort of my brief overview, and John and Mark, you're probably well placed to be able to comment on some of these aspects as well.
Yeah, and I think just like turning over to you, Mark, are there any particular sort of regions in Australia where you are seeing more mining exploration? If so, where and why? And perhaps just on to Rich's points, where do you see the next out-of-box discoveries in Australia coming from?
Yeah, well, there are sort of hot spots and cold spots, I think, and they do vary with time and external influences such as what's the flavour of the month and so on. But right now, I think it's driven by perceived prize and impediments. So if the prize is a hot commodity or a big prize, and the impediments are such that it's doable, and there's many of those, it tends to drive certainly the smaller end of town to where that prize is. Right now, I think Victoria's seeing a resurgence with gold, and the prize there is ultra high grade gold ore bodies that can make you the lowest cost producer in the world. The flip side of that, though, in Victoria is the ESG issues in terms of it being heavily populated with conflicted land use and conflicting values and so on. Yeah, the obvious example of that is Fosterville with Kirkland Lake, and also Thursday's Gossan with Staveley. And another area, I think, is the Pilbara in Western Australia, which last year, I guess, was all about gold nuggets with Novo, and as of last week, is more about more conventional gold mineralisation with the Grays discovery at their Hemi prospect, which, although it's very early, looks pretty interesting. And then, of course, there's all the stuff in the Patterson with Rio's Winu and the neurology with Antipa and Greatland Gold and so on. So there's plenty of exploration and backing for exploration, but it's very compartmentalised, both geographically, commodity-wise, and so on. The interesting thing about all of that is, over half of those people I've mentioned are non-ASX companies. They've come from overseas to explore in Australia, whilst there's, I can think of 4 Aussie-listed companies, Northern Star, St Barbara, Newcrest and Oceana, who've done the exact opposite. They've gone overseas to expand or explore. So it's very much a grass is greener syndrome, and very much driven by what is perceived to be a good thing to explore for. And in a world environment right now with various unpredictable leaders and unpredictable world events like coronavirus, gold will forever be in favour, I think.
So gold is obviously in favour at the moment, and John, obviously, along with recent prices in gold, you'd expect to see an increase in gold exploration. What other commodities in Australia can we expect to see an increase in exploration over the next 12 months?
Yeah, thanks, Andrew. I think, just addressing that question, there's probably 2 main factors that drive where and what is explored for. One is obviously metal prices, and the other is, if there is a new discovery somewhere, then that becomes, a hot play, and exploration companies pile in and stake the ground, all around that, and those two factors are obviously linked. So in addition to, I was very pleased sitting here in Melbourne to hear, Mark talk about, resurgence in gold exploration in Victoria. It's been a very long time coming. But in addition to that, I think, we are seeing renewed excitement in New South Wales in the Lachlan Fold Belt, looking for, the next Cadia style copper or gold copper porphyry. So I think we will see copper exploration continue to be strong. I think that's probably one of the best ways to play the battery and EV mineral space. The battery sector is changing very quickly, so it is hard to pick, whether you should be chasing nickel or cobalt or lithium. But copper is definitely, going to be required no matter what sort of battery you put in your electric vehicle. So I think we will see an increase in copper exploration, and then I think we'll probably see some, just driven purely by price. We might see a bit more, for example, palladium. That's been on an absolute skyrocket in terms of its price. So we might see a little bit more PGE exploration in certain spots, perhaps mainly in WA. We might see a bit of increased exploration for mineral sands. That's definitely something that's relatively low cost to explore for. Certainly cheap drilling, and some of the deposits we're seeing, attributes. They have a credit in terms of some rare earth minerals. So, and that is certainly an area which is being driven both by price and also to a less extent, by government encouragement. So, yeah, look, that's just to name a couple of various commodities.
And just on a specific question sent in by the audience, will lithium and cobalt still be the go-to metals for EV markets in 5 years' time, or will new technology change this?
Perhaps just my 30 seconds on that. I think, in terms of demand, lithium, as I understand it, a lot of the battery manufacturers have tooled up to produce lithium-ion batteries, and that won't be changing in the near term. Cobalt, there is a lot of talk about moving to NMC 811 ratio, which will drastically reduce the amount of cobalt in these batteries, and that may happen in that period over the next 5 years. Certainly, Volkswagen and some of the other car manufacturers are forecasting and working towards that. So yeah, look, if I had to bet on those two, I would say, I'd rather bet on lithium than cobalt.
Okay. And I think that probably sort of leads on to our opening poll. And I'd obviously invite all attendees to go and participate. So we're going to have the first poll up on our screen now. And the first polling question is, do you expect Australian mining exploration budgets to increase or decrease over the next 12 months? You've got three options there: increase, decrease, or stay the same. So whilst I encourage you all to go and vote, I'll just move on to the next set of questions, which are on financing exploration projects. Whilst we are waiting for the audience to give us their polling answers, again, back to yourself, John, do you expect the exploration budgets to change over the next 12 months in Australia? And do you expect there to be any differences between Australia and other parts of the world?
Yeah, look, I think I'm optimistic that exploration budgets, I think, in Australia over the last 2 or 3 years have been on the increase from a real low around 2015 or so. So I think that trend will continue, as those budgets are dominated by gold. I think last year 50% of Australian exploration budgets were directed towards gold, and with a very strong record Australian gold price, I would see that increasing.
Okay, so perhaps we can close the poll now and just have the polling results up on the screen. I think we can see that 61% of you thought there'd be an increase in Australian mining exploration budgets over the next 12 months. So, Mark, I'd still ask you sort of like two questions rolled into one. As a miner, what is the current climate for financing like for Australian exploration? And also a question that's been sent in by David Teskey. Can you also talk us a little bit about how the investors into Australian exploration have sort of like changed over the last sort of like year to sort of like 5 years?
I'll try. I think, we talk of the market as a whole, and it's many things within other things. So again, it's very compartmentalised, and I think the ease of getting finance for exploration depends on, amongst other things, which commodity you're exploring for, which location you're in, and who the team is. So, in terms of the commodity, it's always going to be easier to get risk capital for a commodity that is or is perceived to be hot or going to be hot. Years ago, that was graphite, lithium and cobalt, not so much now. Right now, it seems to be gold, the perennial. And location-wise, again, it's all about, particularly for the smaller end of town, it's about time. So anything that's going to impede the exploration process in terms of a dollar cost or time delay is a very big disincentive and drives people to particular places. So, I've explored a lot of places in the world, and I've sort of gradually realised, having done so, that probably Western Australia is the easiest place in the world to explore because there's no one else there. There's a whole spectrum of difficulties and different types of difficulties. Victoria's popular now, and I mentioned before that there are conflicting land uses and sort of social and environmental values and so on that make exploring in Victoria trickier. But more people are coming there because it's even trickier in a lot of other parts of the world right now. And then in terms of attracting exploration finance, it's the team. It's backing the jockey rather than the horse. And again, across the investment side of the industry, people have different views, but quite a few people just back the jockey irrespective of what the horse is. So those are key things I think are important. And if you're in the right commodity, the right place, and you've got a half decent team, you're going to get a lot of money, probably more so than a little while ago now, because in a fairly fair landscape, there's more money on the sidelines waiting to go into whatever is the next hot thing, as John mentioned. And looking at De Grey's share price move and Moho's share price move in the last day or two, for example, they've both gone 100 to 200% up. The market jumps on that, and of course your share price is your currency for financing yourself. So very, very segmented.
Mm-hmm. Richard, part of the challenge of exploration is the lack of consistent funding and investment. Exploration budgets are often the first things to be cut in a downturn. Any thoughts about how this dilemma can be overcome?
Yeah, it's the perennial question, isn't it? I mean, as you say, as soon as times get tough, exploration's viewed as discretionary spending, and I think people forget that exploration is, it's the lifeblood of the industry, and without discoveries and new resources, then mining companies will cease to exist. I think there's obviously a number of ways to tackle this. I think history has shown that some of the most successful exploration groups are the ones that have a long-term strategy and consistent funding. So having people to have the courage to back the teams, and when times get tough, to hold back and say, well, okay, well look, we need to, we still need to fund exploration, and you know, and back the team. It's always a really a really difficult decision. But you know, if we can get some get brave board members and engage with your with your board members, so they really do understand the value that exploration can deliver, I think is really important. Look, and the second thing we could think about, and you think about how we fund exploration at the moment. So obviously a lot of risk capital comes into the market, and I think you have to question how effective that is used sometimes. So maybe there's a move towards the prospect generator model, which is having larger companies fund smaller entities through joint ventures, through possibly equity investments, and backing multiple teams. Puts exploration dollars into the ground, and certainly gives large companies a bigger and better chance of success.
Just on the prospective generator model, I always thought that was something that was kind of pushed more hardly in North America and Canada, specifically by the likes of Sprott. I don't seem to have seen it as much in Australia. Are there any examples of prospective generators in Australia at the moment, and do you think that will go and change?
Look, I think there's probably a lot of companies that are prospect generators, but they just don't realise it. So obviously, Oz Minerals has a joint venture, or several joint ventures with Red Metals. Red Metals has quite a portfolio of exciting projects, and we were lucky enough to be able to JV in. So Red Metals are effectively prospect generaters. So it's to that degree, it's common, but certainly not as common as North America, where there are companies that will generate a huge amount of prospects over short periods of time, and constantly have projects going out for option, for JV.
And one thing that you've been looking specifically at Oz Minerals is crowdsourcing with Unearth. Can you tell us a little bit about this and how this might help exploration discoveries?
Yeah, sure. So last year we embarked on the Unearth project. So to give you a bit of background, Prominent Hill was discovered a long time ago now. We've spent probably $80-90 million on exploration on the Mount Woods province, looking for another Prominent Hill, and has not been successful. So we had to challenge the norm and do something different. So we teamed up with Unearth, who are sort of specialists in crowdsourcing, and we developed the competition. And it's not the first of its type. We're probably third in the queue, but I think the differentiator for us was the previous competitions have all been around sort of near mine and brownfields exploration, whereas we were very much a sort of a regional exploration competition. So we released all of our data to the crowd, and basically said, "Oh, come on, guys, generate targets, and we'll back you with prize money." So we had $1 million worth of prize money, which obviously grabs a serious amount of attention. We had hundreds of contestants from around the world. The geographies that were people from was just pretty much every continent. And I think the really pleasing thing was just the amounts of different industries who were interested. So that's sort of the structure of the competition, and how is this going to help, and why did we do it? Well, that we firmly believe that collaboration has got to be the way forward in this industry. So I mean, everybody everybody knows within mining you generate your various data sets, and it's pretty much viewed as company IP, and it sits away on your server, and never really sees the light of day. So putting that much information out on the web means that we can garner many different people's views and ideas. You can have people who are not from the resource industry looking at your data. We obviously had a lot of data scientists, but we have people from the oil industry, lots of different sort of high tech industries, and it just gives you another view. And I think that's going to be the way forward, and it's really going to drive exploration success in the long term.
Okay. Let's have our second polling question up on the screen now, and we've touched on some of these issues before, but the question coming up on your screen now is: what is the biggest barrier to Australian exploration over the next 12 months? Increased ESG and environmental concerns, regulation, lack of financing, commodity prices, general economic climate, and lack of good projects. And just whilst we're encouraging you all to go and vote, we did have actually ESG was actually raised a little bit earlier on in the webinar, John. From an investor's perspective, does ESG matter in Australian exploration? Is the E becoming an increasingly important consideration?
Yeah, look, I think absolutely. That's a bit of a no-brainer. I think investors, where ultimately, who ultimately drive what money and where it gets spent, are more and more focused on ESG. I think if you look at what stocks are really running hot at the moment, for example, Tesla is going bananas, and that's seen as a green stock. So if you're stacking up two projects and one hasn't got strong environmental credentials and the other has, the money will definitely flow to the greener project. One example we see here in Victoria, there's some ground being tendered by the Victorian government at the moment, and I think in terms of the criteria for the winning tender, the actual exploration program might only be about 25%, and the rest of it is largely ESG values, which the tenders are going to be ranked on. So that move away, for example, from some investment in thermal coal, that's one end of the spectrum, and thermal coal is certainly not getting too much love from investors because it's seen as very dirty. Whereas I think if you can present an exploration project with as many green credentials as possible, you'll stand a better chance of winning investment.
Mm-hmm. And Richard, how are miners such as Oz Minerals factoring ESG into their exploration?
Oh, it's absolutely critical now. It comes into everything from exploration strategy into how we select JV partners, how we work with local communities. It's becoming sort of a significant driver for the business, and out of that comes significant value. And I think you have to look at this as a positive and harness it, and it's a bit cliched, but looking for those win-win situations where everybody can share in the value that mining projects that create. And exploration, we're always we're the first ones on the ground, so being that first point of contact, you've got to get everything right from day one, because it's so difficult to mend fences if things go wrong. So you've got to have really strong ESG from day one of any project nowadays.
Mm-hmm. Okay, thank you very much for that. Perhaps we can have the answers to the second poll just up on the screen. Fairly sort of like evenly split. I think that general economic climate at 33% was the #1 concern that the audience had about the biggest barrier to Australian exploration of the next 12 months, followed by lack of financing and ESG in second place on 21%. One area, getting back to yourself, Mark, that I'd like to touch on is technologies. What technologies do you see that will most impact exploration?
Well, I guess people get very mesmerized by technology, thinking that a new technique will be a silver bullet to suddenly illuminate things that were in the dark before. I don't think it really works like that. I think it's a whole armory of different things which cumulatively can help. And I'll mention a few of those, but the important thing is, I think, to understand that they are only a means to an end. They're not an end in themselves. And with generational change, I think there's a creeping perception that technology is all and can replace some of the more dinosaur things like walking around on the ground and using your eyes and so on. And there is no substitute for that. So new technologies, providing they're used as part of a bigger approach, are good. And, some of those technologies, it might be big data. So being able to crunch the forest to see the trees is one. In terms of techniques, gravity is becoming more commonly used, and airborne gravity is particularly good, but the trouble is it's very expensive. There's some fancy geochemical techniques like enzyme leach or ionic leach that can sometimes see through cover. Sampling water in wells is another one. And at the other end of the process, I guess, things like photon gold assays, which is a new assay method using neutron activation to reliably predict what is otherwise nuggety gold. So there's a whole bunch of things, but they're each small parts of the big picture. And I think there's also a tendency to assume that everything that might exist in outcropping areas has been found, and therefore everybody's looking solely under cover, and all the technologies are focused on seeing through that cover. When in fact, I think there's a lot of ore bodies just 10 or 50 or 100 metres below the surface that won't necessarily have a surface signature in outcropping areas that can still be found. So, I think there's a variety of things that are available. They each have their place. Used appropriately, they're good. Relied on overly, they're potentially a shot in the foot.
Mm-hmm. And then we also sort of touched upon people earlier on in the webinar, and I know that at Minds and Money, Mark, you've talked about the importance of culture when building a team. Can you explain a little bit about how having a good company culture helped you in some of your exploration successes?
Yeah, sure. I guess our premise is that everybody in this game is clever. Everybody has access to the science and the ideas, and everybody has access to the same technology with very limited exceptions. So that's the field you're competing against. The thing that can perhaps give you the edge is the culture. It's knowing that you don't need to be clever, knowing your own limits and ignorances, knowing the limits of the technology and the science you're using, and putting all of that into context. I think being able to suspend disbelief, having the freedom to ask questions, to do things, and to get it wrong, which requires a group in which that is tolerated and actually encouraged. To do something even if you can't justify why, the old gut feel thing, which is really more than that. And there's been a number of discoveries made where people have gone and done the thing that they can't quite justify and been successful. And I think an epitome of that is the black swan syndrome, where you go looking for things where conventional wisdom says you shouldn't. And if you actually look back on most major discoveries, they're usually black swans. At the time, they're different styles or different places. So unless you're in an organisation that has the freedom to do that, rather than to have to justify something in an overly scientific or quantitative way, I think you can actually disadvantage yourselves. And you know, we say never be fooled by our own success, never believe our own bullshit, never underestimate luck. Just position yourself to take advantage of it when it comes your way. And it all sounds very simple, but there's lots and lots of organisations where people, for whatever reason, don't feel comfortable doing that. So it's really just creating that environment.
Mm-hmm. And then just kind of like leading on from that and probably moving back to yourself, Richard, I think in your opening answer, you talked about obviously the importance of youth and getting more young people into mining companies. Can you talk a little bit about what Aussie Minerals has sort of done to encourage more young people into the mining industry and into exploration teams? And perhaps if there's anything that the industry can be doing sort of differently in that area?
Oh wow, that's a pretty big question. It goes all the way through to. I mean, it's not just what an individual company does. It's you know, you got to step back through universities and schools, and I think the industry as a whole has got to lift its game and position itself to be attractive to a new generation of people. So, you know, I think Mark made some very good comments on culture, and you know, there are a lot of aspects of that we need to really push to you know, to encourage people into the industry. So, you know, yes, you'll get all this wonderful experience, there's all this technology, plus there's all, you know, getting boots on the ground, going and seeing things is so important. So, you know, we need to make sure that we are, you know, the positions that we have are, you know, attractive to a new generation, and that may mean it's a, you know, there's a balance of you know, of how we work and what we actually do. You know, with respect to us, I mean, you know, we have, you try and encourage as many graduates into the organisation as possible, and you know, give them exposure to, you know, all elements of the business. So you know, from the sort of the, you know, the high tech side through all the way through to, you know, getting out of the field and, you know, kicking rocks. So it's it's I think it's an industry challenge as a whole rather than an individual company.
Mm-hmm. One other area that was touched on earlier in our poll was regulation, and I think also Mark obviously talked about the regulatory environment in Western Australia and also in Victoria as well. But John, I just think as an investor, what is the current regulatory environment like for exploration in Australia? How does it vary from state to state? Are there any particular sort of states that you think are good examples, and are there any sort of states where you think the regulation could be improved?
Yeah, look, I think in Australia, you know, we're hopefully taking a bit of a middle road in terms of relativity to other countries around the world. For example, I think, you know, Australia's a lot easier to explore than some of the places in South America, like Ecuador, for example. But it may be, you know, the regulation may be tougher. Whether or not that's a bad thing, you know, tougher than, you know, say places that the companies are going to in West Africa, for example. I think, you know, governments, state governments, you know, on one hand can be very encouraging of exploration, but on the other hand, they can, you know, make it tougher as well. And I just, you know, refer to Victoria again, where, you know, most states, it does have a drilling grant fund. But you know, last year it decided to bring in a gold royalty without any consultation with the industry. So you know, it is a bit mixed. I think absolutely agree with Mark's comments about you know, WA. I would say that is probably one of the best jurisdictions in Australia to be exploring in. And generally that applies. I think, the large areas with less people make it much easier. But a place I have had a bit of exposure to recently, Tasmania, does seem to buck that rule. That I would say that is got a very, very green perception amongst the investors, but actually the reality is much better, and has proved to be a very a good place to go and explore, and relatively simple. So that's just picking a couple of states, and regulation is a huge area, but I'd go for those two.
Okay. And I'm just thinking we're coming up at the sort of like 5 minutes to go mark. So I'd encourage, if you have any more questions from the audience, just to be sent in, and we'll try to go and squeeze them in. Just one question that was sent in by the audience. How can we drive meaningful collaboration between industry and academia in exploration? I don't know if I can just like throw that back open to yourself first, Mark.
Yeah, okay, I'd love it. I do think there is a fundamental structural flaw in the system, in that, in the absence of sufficient government funding for universities, they resort to industry to survive. And naturally, the people with the biggest purses are the big guys. And so I think it tends to be the bigger companies' interests and agendas that are often disproportionately represented in that collaboration. So, it would be great to get a more even balance, but how you actually achieve that is, has eluded me and probably a lot of other people to this point.
Mm-hmm. And then another question that's been sent in is, mining.com recently reported that private capital raising for mining was at an 8-year low. Does the panel have any comments on this and how it affects exploration in Australia?
Yeah, Andrew, I think we've probably covered that. I mean, the declining discovery rates, I think, is something the industry is going to be challenged with, and also, while there's been a reasonable amount of money raised, I think you actually if you look at how it's spent, that sort of focus on easy or easier targets, rather than going down to grassroots and conceptual exploration to really change the dial, I think is going to have a big impact.
I think that the benefit, sorry Andrew, the benefit that Australia does get from the lack of the risk aversion in the sector is that it is a low sovereign risk jurisdiction. So even though exploration is obviously a high risk game, it's perhaps that sovereign risk is much less in Australia. So we are seeing the smaller pool of exploration capital, more of it coming into Australia and North America in particular than into more developing areas. So perhaps that's a silver lining to that particular situation.
Mm-hmm. So let's probably just get up the last poll, third and final poll of our webinar. What would have the biggest impact on Australian exploration? And you have 5 choices: less regulation, technology innovation, improved economic climate, higher commodity prices, or something else. And whilst our webinar participants are just polling their answers on that, let me just ask all 3 panelists about whether they can name one particular Australian exploration project they are excited about and why. Perhaps I could turn to yourself first, John, followed by Mark, followed by Richard.
Thanks, Andrew, and I hope we're allowed to talk our own book here. Look, one of the funds, fairly long-term holdings, has been De Grey, which Mark alluded to earlier. That's had some really exciting, quite thick good grade gold hits up in the Pilbara, and definitely very early days, so not closed off. Lots of blue sky, which explorationists love. So yeah, they got a 1.7 million ounce global resource there at the moment, and we hope that they might be on their way to like something in the order of 3 million ounces. And if that happens, we are very hopeful that they'll move towards production. So yeah, De Grey would be my pick.
And Mark, what would be yours?
Look, bringing it down to one, I'd have to agree with John, and I have declare a vested interest in that as well. But without any sort of partisanship, yeah, it's new. It looks potentially large tonnage. It's in an area that's got some infrastructure and other resources already, which makes things a lot easier. It's in WA, etc. And that as John said, it's very early days. But that's the sort of thing that struck me instantly on the first announcement as one of the things that has potentially got the potential to go all the way.
Mm-hmm. And would that be your answer as well, Richard, or would you choose a different exploration project?
Oh yes, lots of. Look, I've got a whole swag in the Oz Minerals portfolio, and seeing as John picked one of his own horses to back, I think I'll do the same. I will go for the next round of drilling at the Mount Woods project. So obviously we did the Unearth competition, and we drilled half a dozen holes. We're going back later this year to test some of the more innovative targets and some of the out of the box thinking. So yeah, we're pretty excited about that.
Okay. Well, on that sort of like positive note, that concludes today's webinar. Thank you to Mark, Richard and John, and thank you to all of our listeners for dialing in. We'll be covering the topic of Australian exploration in greater detail at our upcoming Mines and Money Asia event on the 31st of March to the 1st of April. All listeners of this broadcast will be entitled to a discount by using the following code that should be coming up on your screen now, Asia Web. And also, for more great news and content, please check out our Mining Beacon website at www.miningbeacon.com. Many thanks, and see you again soon.